Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 25th of July. Now, new services starved of a little bit of oxygen, right? Now, we haven't got any major releases. It really kicks in on Wednesday, I guess. You got the Aussie CPI, but really the Fed interest rate decision and their press conference, and then Thursday, the ECB. So they're sort of just regurgitating a bit of information here. If anything, the markets are obviously very nervous around these big releases. Now, just looking at some of the numbers that I was sort of highlighting yesterday, the manufacturing numbers, like Germany is the key to Europe, right? But if you have a look across even the French, the German, the Eurozone, and even the UK numbers, okay, all their the data there, the PMI data, weaker than expected. So and what we saw with that, right, and this is where you can sometimes get a nice, easy sort of trade ahead of a big release, right? I'm on the wrong page there, but let me just come over to the currencies. You're starting to see a little bit of a drift off here in Euro, Sterling. I mean, Aussie and Kiwi are following suit, but that's sort of the way of it. Now, I'm on the daily charts here. If I just switch over to the hourlies, you'll start to get a bit better idea. Euro's just drifting now. I can't see that going too far ahead of the ECB. Obviously, the Fed actually will have the first impact, but we are starting to see a continuous sort of rollback of UK data. Started with the CPI numbers, and we're sort of right at the crossroads there on sterling, right? So that's what traders had to work with yesterday. It's not like they've really sort of set the house on fire as far as the big moves go, but that's what we're sort of dealing with. Now, one other thing that I was focusing on a week or so ago, just showing you the risk reversals, right? The activity of calls versus puts. Now, that was sort of going up. If anything, it's starting to just roll over a touch, right? So when there's a big event like the federal interest rate decision, Federal Reserve, you start to see the market reposition itself to where the pressure points are. Now, Euro at this point, still a bias towards calls over puts. So that tells us the market is very concerned about a higher Euro. Makes sense, right? Because you got the Fed potentially saying, you know what, we've raised rates. It all looks pretty hunky-dory from here, and away we go. So potential weaker US dollar sends the Euro higher. So the market is nervous there on Euro, but not so nervous on sterling, right? If anything, that's sort of flattened out, which tells us after those UK CPI numbers, the market isn't too concerned about higher interest rates potentially in the UK, and that's something to keep an eye on as well. So risk reversals topping out a little bit, but Euro still the standout looking to the top side. All right, so if I just come back in here and give you a look at what I think the key opportunities for today are. All right, let me get this up. Okay, so the German IFO numbers, right? So as I said, Germany is the key to the whole European situation. If we get a low number, Euro and dollar Swiss are trending down. And if we get a high number, well, Euro Aussie, Euro Kiwi, and Euro Yen are the pairs that are trending higher. Okay, it's a pretty easy sort of layout. This is very similar to yesterday's data, where you get a nice, easy rollout. It's not volatile at all, and you get a chance to sort of work with things. But on I just showed you the charts here before, and I'll come back to them. On a short-term perspective, Euro is drifting lower, right? So ahead of Wednesday's Federal Reserve interest rate decision, we could see Euro drift lower nice and easy if the German IFO numbers are weak. If it's strong, well, it's just going to rally back in towards that resistance line. And these are the pairs I would be looking to trade myself. Okay, now with the as we go into the North American session, this is pretty good actually, because we don't have a huge amount of data before the big trade days or the big information days. The S&P Case-Shiller numbers, right? A good historical number for house prices. That's the first number out. The US consumer confidence is out about an hour later. So to me, like the trending pairs at the moment, the dollar index is just drifting. Well, it's come back, but it's still, the dollar is in a downtrend at the moment, right? Until something changes. So these are the pairs. I've got sterling here which is at the crossroads. I can't imagine this data will be enough to sort of break sterling down. But, you know, stranger things have happened that'll really take the central bank. I don't think the market will jump into big trades. There might be a false break trade there or a short-term false break trade on sterling if we get really strong US numbers. But you know what? The market's been squeezed there as far as interest rates go. So I can't imagine those numbers being huge. On the other side of the spectrum, if we get weak numbers, if we get high US numbers, well, then the euro and sterling, it is against the trend. Those two pairs have been going up. So that's where, we could get a little bit of a little quick move to the downside. Okay. And that's pretty much all we've got to look at on this perspective. Now, let me just come back to the charts there just to show you a bit of my analysis here, right? So when I come in to look at, say, the euro situation, okay, I look at the euro just on its own against the dollar. Now, just trading the majors, obviously there's more liquidity there, but you can often get misled into what euro is actually doing. So the euro against the dollar, it is drifting lower, right? And we've got this sort of pivot point here. Now, if I just shrink that up, I'll just show you what I mean. This is where we've had multiple highs and or lows at one particular level. You can see over here at 110.95 going back to April. It sort of topped out there a bunch of times, and we have just drifted below that, right? So on an hourly perspective, you think this thing's breaking down, but overall, long term, it's still going up. And there's that sort of pivot line. So it makes it a little bit, a bit interesting, if anything. So, but then you come back and have a look at the crosses on a daily perspective, right? If anything, euro is going up against the Aussie. It's going up against the Kiwi. It's definitely going up against the yen. You know what? If anything, has been drifting lower, but trading sideways against euro sterling, down against euro Swiss, and sideways against euro CAD, right? A completely different picture to what you get against the dollar, right? This is what I'm trying to say. When you are trading, don't just focus on the dollar, especially for the big euro numbers, etc., because you do have opportunities here on a lot of the crosses. So I go into the euro crosses on a daily perspective, and then I'll come in for my execution on the hourlies, right? It makes it a lot easier to work out what's going on. And likewise for the dollar, okay, I do the exact same thing. Look at the dollar. It's sort of broken down. The dollar index is broken down. Dollar Swiss, dollar yen sort of back in the middle of the range. Pressure on the downside here on dollar CAD. Euro's going up. Sterling's going up at this point. Aussie and Kiwi, right? They're just a little bit out of the loop here. They're just drifting sideways at the moment. Okay, so that sort of allows you to isolate what's happening with the trends, and then you can come back on an hourly perspective once again and work out exactly where to get in. And this is the euro, right? So you might be thinking, if you're just looking at the euro hourly charts, the dollar hourly charts, you think, okay, the dollar index is going up. It's going up very short term, but a long-term perspective, it's still going down. And that's the same for dollar Swiss. I like a little bit of a short-term stop loss run here. Hasn't impacted dollar yen, the dollar CAD. And if anything, Aussie and Kiwi are hanging on there, but this is where you see short-term pressure on the downside of euro and sterling. And you've got to bring that into perspective with the big picture. All right. So if I just come back to the numbers for today, let me just change screens here. Where are we? Share. Right. Okay. So just looking at today's numbers. Let's get on to Tuesday. Right. So just to give you a look at some of these numbers that are coming out. The German iPhone numbers, as I said, this is it's a nice trading experience. It always has been, right? Because the market sort of looks at the data and they just sort of weigh up, like obviously looking at the previous numbers, what's happening short term, whether it's a short-term trade or what's happening longer term. And you can start to get an idea of the general business sentiment in Germany, right? As I said, this is the nuts and bolts of the euro situation. So you want to be keeping a close eye on that. The S&P Case-Shiller numbers, as I said, keep an eye on that. It's a good historical number, gives a good reflection on what's happening on the house prices in the US. And then you've got the US consumer confidence numbers there as well. And of course, it'd be rude of me not to mention, just keep an eye on those ranges of those two US numbers. Anything outside the ranges potentially has a bigger impact. All right, so that's where we are, guys. It's a nice, easy trade day, okay, in the lead up to the US Federal Reserve interest rate decision, and then obviously the ECB on Thursday. So lots to play for. Don't forget Thursday, there's a huge amount of US numbers coming out. So we're going to have a lot of answers from the Fed. I think the market is already factoring in, obviously the 0.25% is factored in, but what they're going to say afterwards is the key to it. And that's where we could get the decent moves. All right, guys, I'll cover more of that tomorrow. In the meantime, just keep a track of what's going on across the major pairs and indices. At the moment, we've got a bit of a very light risk-on situation, and that seems to be reflecting on the currencies, or on some of them anyway. All right, guys, have a good trade day. All the best. Cheerio.